For our COBT listeners and viewers, it's Maynard, Mike, and Arjun here with something we're just incredibly excited about. We've got Jim Grech with us today. Jim's the president and CEO of Peabody Energy, obviously a really important coal company. Coal is something, if you've watched some of our previous podcasts and communications, it's something that we've wanted to spend more time on. It's a hugely important energy source for the world. Very impactful, very needed, and something that's also probably top of the list when it comes to misunderstood. So Jim, let me just pause and say we're delighted to have you with us and can't wait to talk to you about all the issues and opportunities in coal.
Well, thank you, Maynard. And anytime I get to talk about the coal industry, I'm always excited about it. So I'm very grateful for having this opportunity.
Well, there's a lot to understand. We can't wait to jump in. Before we do, Mike, what would you tell us about the world, the markets, your perspective?
Yeah. What I would say is I'm probably not going to focus too much on the oil markets. Everyone knows what's going on there, and we can go and see how that plays out. But what I like to think about from the energy markets and from the bond markets and stuff is what happened pre-June 12th, post-June 12th, because June 12th was the day that Israel bombed Iran, and so that's when oil prices started going crazy. The market started going crazy. So from a crude oil price standpoint, I'll maybe hit on it just a little bit from the standpoint of what happened on Sunday. Sunday, crude oil prices went up to around $79 per barrel on us hitting nuclear sites. But on Monday, crude oil closed around $68, so down significantly from that. And yesterday and today, you had crude oil is down another $3 or $4 on potential Mideast peace. And so you've got crude oil going from essentially 65 pre-June 12th to 78. Now we're dead back down to 65, so essentially unchanged. From the standpoint of energy equities, similar story. Energy equities are basically unchanged. They've round trip. We're now back to where we were pre-June 12th. And what I'd say is pre-June 12th, what was the sentiment? Pre-June 12th, the sentiment was that oil markets are basically surplus, energy equities, the estimates need to come lower, no reason to be in these, stay in large cap names, stay in a few names. I think that's going to be the strategy going forward as well. And so that's what we have in the energy equities. From a broader market standpoint, the market was down a couple percent, but now we're basically up about 0.5% since June 12th. And markets are now about 1% away from all-time highs. And so broader markets are basically up since June 12th. Now, what I'd also say from a bond standpoint, bonds are relatively unchanged since June 12th. But the interesting thing is markets are now going to start to be focused on what is going to happen to domestic policy. What's going to happen to the big, beautiful budget bill? Are they going to be able to get across the finish line? And I think the last thing, and people haven't been talking about, is on July 9th is the deadline for all these tariff deals to basically be signed. So you're going to start to see Trumpitility is going to start picking up on a domestic front here over the next week or so. You're going to be hearing more about these tariff issues. And so, the volatility is come out of the market. We're probably a little bit overbought, probably a little bit oversold on energy equities, but that's where we are right now. So we're looking forward to talking to Jim today about the coal markets because it's something that we think is really interesting. It's not talked about enough, and it's it's sort of the base fuel for most power plants around the world. So we're looking forward to this.
Arjun, I know you've got some thoughts. You've been spending a little more time around coal, but let me throw it to you and see what you'd offer up.
I think Mike covered oil markets pretty well. I'll just add a few other comments, which is there's so much focus on Middle East turmoil, and I think people still very much have this 70s mindset to it, which is you have a big supply disruption, it causes a huge super cycle, and it's just not factually true. In last week's super spike, I won't repeat it all, but we looked at 3 historic disruptions, and ironically or otherwise, the one that was the biggest, which was the Iran-Iraq War of 1980 to 1988, where you took off 10% of world oil supply, actually ended up with a structural bear market because you had non-OPEC surging and demand falling. You had a range-bound market after Gulf War I, and you had a structural bull market after Gulf War II, which ironically had the smallest disruption, but of course that was China and BRICS and so forth, with the point being, oil supply demand trends, underlying disruption trends, that is what we should all care about over the long run. So we spiked, we're coming back, What we're really looking for is what are the signs that oil demand is going to get back above 1 million barrels a day of growth, and then what is the outlook for non-OPEC supply. The balances had been looking weak for the second half of this year. There's probably some debate as to whether an Iran disruption could bridge that gap. It looks like that's not going to be the case. So again, I think we're back to saying the back half of 26, 27 when oil might tighten up. But to get to our topic at hand, I'm really excited to speak with Jim of Peabody. Coal is a topic that I came to when people were grilling us about, quote, peak oil demand and the outlook for that, which was a big feature of sort of the energy transition and net zero narrative of the last 3 to 4 years. And we studied coal to examine, well, when did coal demand peak and how did that look like? And of course, when we're doing our analysis, lo and behold, coal demand is yet to peak. It's actually making all-time highs. It made an all-time high in 2024. We'll see about 2025. And clearly it's a trend of declines in the OECD, US, Europe, and Japan, with big growth, especially in China, and then countries like India, Indonesia, and the rest of Southeast Asia, they're just getting going. So I think much like we have this call on oil, the idea that anyone can know when coal is going to peak, how do people know that when we still have the other 7 billion people on Earth, not the lucky 1 billion of us that enjoy full, rich lives, but the other 7 billion people on Earth, they're moving up that economic and energy S-curve. Why isn't coal going to be some major portion of their power mix, especially when we think about it being abundant, low cost, generates taxes, revenues, employment for local populations, especially in Asia as well as Africa. So I think we've come away feeling that the worst assumption in all those net zero forecasts was actually the coal decline. I think oil demand is going to continue to grow, but I'm willing to say that we can debate that. I think natural gas is going to grow a lot, but you could even have some debate there. I think there's actually no debate that globally coal demand is going to grow. I think the one topic that I think all of us in the oil and gas world are guilty of is we get mad when the renewables people say, hey, natural gas isn't as clean burning as you say, and you're leaking methane, and oh, it's a bad fuel, you should just do solar and wind, and maybe now nuclear. We get really upset at that. Yet we as oil and gas people have regularly said, hey, natural gas is cleaner burning than coal. So, I think we bear a little guilt for perhaps not having examined and studied the issue previously. I'll give you credit, Maynard. You've always been a proponent of studying this. I'll give myself half credit for at least studying the peak demand argument. I think we could do a lot more. I think the remaining question is, are we so sure that we should write off coal in the OECD? There's some great graphs that show there's no rich countries that are energy poor. It's a great graph. If you're a rich country, you're energy rich. Let's look at industrial manufacturing. Is there an example of a company that is healthy and growing in industrial manufacturing that somehow is using less coal? And I do wonder about that. The declines in coal you've seen in Europe, the declines in coal you've seen in the US, you can say there are many reasons for that, but it does also coincide with a period of declining coal demand in these areas. And look at China, factory of the world. How are they powering that? They're powering it with coal. They are doing nuclear, natural gas, these other things, solar and so forth, but a whole bunch of coal. I think it's a really important argument to have, and I'll turn it back over to you, Maynard.
Well, awesome. Well, thanks, guys. Jim, again, welcome. We're delighted to have you. As these guys were talking and just in the pregame, thinking about all the things we might talk about, there's a ton. But maybe let me ask you to tee it up for us. You joined Peabody in June of 21. And so the world there's been so much going on in so many ways, but particularly around energy policy. Would you mind just talking a little bit about what drew you to the personal challenge of joining Peabody, the experience for you? And I think most of our viewers know Peabody's a really old company. It's been around for a long, long time. I think the number is 1883. I might have that wrong, Jim, but it's a long time. But it's got a rich history. It's obviously a U.S. player, also has Australian assets, but maybe just level set for us to get started, your own personal journey and Peabody today.
Yeah, thanks, Maynard. And I did start in June of 2021. And as you said, Peabody, we've been around since 1883. And if you're in the coal industry, or any industry really, but in the coal industry, if you have the opportunity to work for the company with the best reputation, the history that this company has, and have the opportunity to be the CEO, it's one you don't pass up. So it's like once in a career, if not longer, type of opportunity. And but I stepped into the company knowing that at the time we had our challenges. It was coming out of COVID, and financially the company had some trouble in the previous years. But I saw the opportunity for this company with the asset base that it has and the focus that the company has on looking towards these growing markets that Arjun was talking to over in Asia, to really to take off and prosper. And we've done that. In the 4 years that we've been here, that I've been here, we've paid off over $1.5 billion of secured debt. So we have zero secured debt on our books. We've reestablished a shareholder dividend and stock buyback program. And the company has invested. We're opening new coal mines in Australia. We've reinvested in our U.S. platform. So we've been able to get the company financially healthy, back from where it was. And we're really focused on these growing markets now with the asset base we have, and adding to this asset base, the opportunities are just endless for the company. So it was that excitement of coming to the best, seeing that it had a lot of room to grow, a lot of room to take on change and get financially strong, which we've done. Now that we've got this financially strong base, we're looking at how do we grow the company even more. And I'm very excited about what the future has for us here.
So Jim, I was curious, as you mentioned, you took over the company at a tougher time. It was a tougher time for the world, but it was also a tougher time in energy thinking, right? Because the world's conception of what an energy transition was going to look like in June of 21 was very different than what it is now, and that's a good thing. How do you just motivationally get your team excited, get everybody fired up for the mission? Because there are a lot of misunderstandings about coal, and I just think the internal sort of esprit de corps is an interesting question in how you tackle that.
Yeah, that's a great point, Maynard, because there's an onslaught from the rest of the world that's been anti-coal. But facts matter, data matters. And when you look at the asset base of our company and where it's pointed to, which is the seaborne markets and the U.S., but heavily to the seaborne, and you look at those markets growing, the demand's been growing, and it's very easy to see, even though there's been this anti-coal theme around the globe, you still look at all these forecasts, particularly for metallurgical coal, but even thermal coal internationally, and you see growth, growth, growth. So you just reground yourself and your employees to, there's a lot of things that are being said about us that may not be so attractive to hear. But when you look at the fundamentals of supply, demand, energy growth, the asset base that we have, we believe in our story, believe in what you have, believe in the story, and just keep your heads down and perform, and things will work out. And they have. And there's one other thing too, Maynard, that I neglected to mention, which drew me to the company, and something that I want to brag about. And was our safety record. Peabody always had a record or reputation for being safe, and I would not do my employees any justice if I didn't let you know that last year our 142-year-old company had the safest best safety record in our history, 142 years. So when you have a company that the employees believe in the story, they believe in what we're doing, they believe in operating safely, operating efficiently, it's a very attractive place to work, and the employees have pride. They have pride in being safe. They have pride in the cash that we generate. They have pride in showing people that they're wrong what they think about the coal industry and what we do for the communities. So it's something that you can't lose sight of, but also we have a lot of good things to keep reminding ourselves about.
Do you mind, while we're on people, just maybe talk about your workforce and where most of them are, and just kind of division of labor? I know that the team is very important to you.
Yeah, so we have, I'll say, two headquarters. We're headquartered here in St. Louis, where I'm at now, but also headquarters in Brisbane, for the administrative staff. But the overwhelming majority of our employees, 95, 97%, are out at the operations, right? We try to keep things spread out at the operations. So in the U.S. and Australia, so that's a little over 5,000 employees. We have 100 and some here in St. Louis, about the same amount in Brisbane, and all the rest are spread out at the mines in the U.S. and Australia.
And I know the Powder River Basin is a place that is, if you're an energy person, it's like Disney World, right? It's got oil and gas, it's got coal, it's got renewables. There's so much happening in the PRB. Not to zero in on a particular asset, but that's an important one for you. Would you mind talking about That one, as well as just your activities in the U.S., so people have a sense of the scale here.
Yeah, so in the PRB, we have what's called our NAR mine, the North Antelope Rochelle mine, which by tonnage is the largest coal mine in the world is open pit coal mine, and could be 60 to 70 million tons a year. It's done more in previous years at that one mine alone. So it is the largest open pit coal mine or tonnage producing coal mine in the world, and it's called the PRB, the Powder River Basin. It produces a thermal coal, which is used for power generation, and relatively low cost to mine the coal. The removal of dirt to get to the coal, which we call overburden, those ratios are very, very small. So the coal can be mined very economically, and is a base load fuel for a lot of the power plants here in the United States. I think there is a huge untapped potential for the PRB coal in export, being low cost coal and very low sulfur coal. It's very attractive to Asia, to these growing economies. And what's the bottleneck that we have for the PRB, which we're working with the government on, the DOI and the DOE, is West Coast port access. The problem has been, if you go up and down the U.S. West Coast between Washington and Oregon and then California, has not been too receptive to having coal ports there. There is potential to take it out of Canada and out of Mexico. So if you want really an untapped opportunity for the PRB coal, there's a U.S. coal demand, which we're here. We're signing long-term contracts. We have decades and decades worth of reserves, but there's tremendous upside if there can be a West Coast port access that's economic to feed these growing markets with this, very low sulfur coal, which is something we're working on.
So that maybe just help us understand that one better, because it's not an issue we're around, but what is the opposition to, or what is the case against it? Who's standing in the way? Like, what's the nature of the objection to a West Coast coal port?
It's been at the state level, and it's just been the word coal, right? Anything to do with coal has opposition to it. So the ports don't want, these states don't want coal going through their ports, going through their states. They just are not a believer in coal, whether it's in the U.S. or internationally. So that's been the opposition for decades.
Would it be a significant investment, Jim, to get one of those, ports in shape, or is it more just it's a regulatory thing?
I think it's more of a regulatory thing. I don't want to say it isn't significant, but you need rail access in the facilities, and there's some places that have that there already. But there's been ample interest and funding to do that. If you could get a site that would host you and let you put this port in. So I don't want to downplay the cost of doing it, but having the funds available is not the issue. Having the site and the ability to access the ports has been the issue.
And one bias I bet all of us have, but you can help us understand it better, which is because this seems to happen in so many markets. The world is going to use, insert name of commodity or energy source here. If you buy it from the West or from the US, it's probably going to be extracted or created in a way which is lower impact than if you bought it from somewhere else. And this is the reason why we in the West should be doing more of this instead of outsourcing it to the rest of the world. I assume coal fits that similar dialogue, but I don't want to prejudge it. You should speak to it.
Yeah, well, first I'll just go back to the safety, right? Our safety statistics, I said it's the best in our 142-year history, but also statistically, it's safer to work in a U.S. coal mine than it is to work in a shopping mall or a supermarket. Our incident rates are lower.
Wow.
Yeah. So that's shocking, right? And you hear about these coal mine, these issues that they have in other countries, and the explosions and the unfortunate loss of life. And statistically, our mines are very safe. So one, you mine it here, it's better just for the employees. But two, again, the perceptions about the coal industry and what mining does. I challenge anybody to go out to our mines in Wyoming and look at our reclaimed mine lands and look at the plains and the prairies and the elk herds and the deer running on it and the ponds that are there, and even figure out that a coal mine was ever there. Last year we reclaimed 70% more land than we disturbed. So we are reclaiming this land, putting it back to what it was before it was mined. And so again, other countries, well, we do that in Australia too. Australia has great laws, safety laws and reclamation laws, but I'm talking about other countries. We're safe. We return the land to as it was or better shape than it was with drainage and so on for water access. So yeah, if you're going to have a ton of coal mined, and coal is going to keep being mined, where would you rather have it mined at, the U.S. or Australia or some other country? And head and shoulders above those two choices, above others.
Another question would be just in the U.S., how much more coal we have, you have just the sort of total resource, like, do you see the U.S. being an important coal region for a long time, or how should we think about the installed resource base, if you will?
Yeah, I mean, there is one way to look at it is if you look at the amount of energy in our coal reserves, there's more energy in our coal reserves than any nation has in any other energy resource. Take the Middle East with oil, look at their oil reserves, look at our coal reserves that we have here in the U.S. Who has more energy in the ground? We do. So there's not a problem about abundance of coal. It's, there's access to coal at times. And again, with our new administration, access to coal leases and so on federal lands is there. So we have an abundance of coal and abundance of energy here in the United States. So that's not the issue. I keep saying that we have this energy shortage in the U.S. and the world, and coal has always been looked at the problem, at least in the U.S. to a certain extent, and in Europe to a larger extent. We're not the problem, we're the solution. We have what you need. We mine it responsibly, we mine it safely, but still there's been a lot of opposition to us.
Hey, Jim, I mean, Arjun, when he opened up, talked about coal demand is going to continue to grow, probably longer than most people think, and I generally agree with that. But just maybe a fundamental question of, you've got two distinct coal markets, right? You've got the thermal coal market and the met coal market. Maybe explain to listeners the difference between both of those and basically the fundamentals that you see for both of those over the next 5 or 10 years.
Yeah, so thermal coal is used for electricity generation, and met coal or metallurgical coal is used in blast furnaces for steel making. And last year there was about 8.8 billion tons of coal mined in the world, and about 1.1 billion of that was for metallurgical or for steel making. And there's some for industrial, and then the majority of it for thermal for electricity generation in use. So when you start looking at the market, so you have to then look at the developing economies versus the OECD economies, and you look at China, you look at India, right? They're the biggest where the biggest growth in coal consumption has occurred. And they're still building coal plants. Last year in China and India, between the two of them, they announced another 115 gigawatts of new coal plants. So how do you put that in context? Well, in the U.S. in total, we have 172 gigawatts in total. Last year, China and India said they're going to build another 115 on top of what they already have. All right. And those plants last 30, 40, 50 years. Another way to look at it is China has 1,170 gigawatts of coal generation installed versus our 172 here in the United States. And India is over 218 or so gigawatts installed, with more being installed. So as that Indonesia, Korea, Vietnam, and we haven't even touched on Africa yet, the need for reliable, dependent economic electricity being sourced by coal, that growth is there. And as June said, it's just, I don't see it slowing down, the need for that in those countries. Now you go to Europe, that has decreased over the last few years, I think. And if you look at their average electricity consumption in 2022 and 2023, it's went down, as has done their manufacturing and their GDP, right? And their industrial growth, it's went down. And you look at that same period, or well, from 2019 to now, electricity rates in the EU are up 65%. So you look at these economies that are embracing coal for electricity use and generation, they have growing GDP, growing manufacturing bases. You look at somewhere like Europe, where it's shunned it, rising electricity rates, decreasing GDP, decreasing industrial base. So on the thermal front, we see growth out for decades to come. And these assets, again, are 30, 40, 50-year assets that are going to need coal. Metallurgical coal used for blast furnaces and steelmaking, again, is a very much developing nations type of market. If you look at the U.S. or Europe, like U.S. for example, we use electric arc furnaces here, which use recycled steel for the most part, and 70% of the steel in the U.S. is electric arc furnaces. So we don't use that much metallurgical coal here in the U.S. But again, those are electric arc furnaces, which are fueled by coal-based electricity. But talking about metallurgical coal, you look globally though, and the blast furnaces, 70% of the steel produced globally is from blast furnaces. And that's projected to keep growing again as all these nations get what we want. They want our standard of living. They want our cars. They want our houses. They want our air conditioners. They want what we have. And so steel use, again, is projected to just keep growing. Steel demand is projected to keep growing for decades to come. So again, there's a very robust outlook for metallurgical coal use well out into the future. So again, internationally, outlook's very bullish. Europe, very muddled to me as to what's going to happen there in both of those areas. In the U.S., we're sort of on the precipice. We sort of went to Europe. We sort of went to Asia. Depends where you are in the country, which state you're at, and how it embraces coal, thermal or metallurgical.
Jim, I want to. You touched upon sort of the health and safety aspect to working at Peabody and how proud you and the employees are about executing on that front. There are a lot of questions that people have about the overall environmental footprint, and I wanted to just give you a chance to address it. I would like to, if you don't mind, skip the carbon part of the discussion and just focus on other traditional environmental issues. And I think there's an idea that the EPA has ratcheted up and ratcheted up and ratcheted up restrictions. It's hard to know for someone like myself what was reasonable, what was not reasonable. How would a modern coal plant compare today, especially to ones built in other parts of the world? Could you just address, and perhaps to natural gas or other sources of energy, could you address the sort of non-carbon environmental side of coal and how you see it?
Yes, there's, the newer power plants which are being built in China and India. They're high efficiency, low emission power plants. So, particulate sulfur dioxide, NOx, VOx, those types of things, those types of emissions, have pretty much all been eliminated from the emissions of coal plants. Those aren't smokestacks that you see anymore in a coal plant. Those are steam stacks, right? There's very little of any types of emissions other than steam you see coming out of those steam stacks, as I'll call them, whether it's here in the U.S. or internationally. What's been the onslaught here in the U.S. Under the started with the Obama administration and the Biden administration is just going beyond what technology allows you to do, going beyond what's reasonable on these emissions. And our country is. I'm very proud of what our country has done historically to clean up the emissions from our power plants, the elimination of the sulfur dioxide and particulates. It's what we needed to do, and our plants in the U.S. now are in the state. They're very environmentally friendly if you're not looking at CO2, if you consider that to be an issue. And so again, the old conception of these power plants being just belching out all these emissions that are poisonous is outdated, and the new plants that are being built, which are in China and India, address that high emissions and high efficiency, low emissions. So, and then again, what do you do with the byproducts of coal? Again, that is being stored and kept different areas as you burn coal. There's ash that's left over. Some people use ash to make other byproducts, to make drywall material, other things that are being looked at. So again, I think it's very outdated when people think of coal and coal plants and the emissions that come out of those plants. But there's something else too, as you look at some of these countries, Arjun, when people look at the power plants and you mentioned, let's not talk about carbon, let's talk about the other aspects. And I think the other aspects that's missed when you look at coal growth around the world is the economic growth that you have there while you're pulling people out of poverty as you give them cheap, reliable energy. If you look at China over the last 3 decades, they've lifted over 680 million people out of poverty through access to modern energy, mostly powered by coal. How can you say that's a bad thing? You look at India, decades ago, in the last century, the end of the last century, their poverty rate was 63%. You know what their poverty rate is now? It's less than 6%.
Wow.
On the back of coal generation, on the back of metallurgical coal, building out their economy. So, when you look at the pros and cons of anything, there's two sides of the story. And coal, unfortunately, has, the negative side has been talked about endlessly for most of my career. But you look at the positive, what it can do for economic growth, what it can do for the standard of living for other people. And you look at how our power plants are today and how they're regulated and how clean they are. There's a great story there that has been, basically been hidden from a lot of people.
If I just have one quick follow-up on this before turning it back to Maynard. So I think in a world where, without question, coal production and demand is growing overwhelmingly in the rest of the world, and it's giving them reliable, affordable power for sure, and letting them take people out of poverty, and as importantly, enhance and build their manufacturing base. If the US ever recognizes we want to do the same, because we're saying we want to do the same, both Democrats and Republicans saying we want to reshore this and reshore that and not be dependent on these foreign supply chains that may or may not be there, it does seem like coal is going to play a role. Since coal for sure is going in the rest of the world, whatever debate people want to have about the carbon aspect to that, I'm going to say has to involve China and India to a much greater degree. We are much smaller in that regards. What would be the legislative things that could or should be done where it's not just Trump's for coal and Biden's against it, and whoever comes after Trump may be for or against it? I know this answer for some of the oil and gas stuff. I don't know for coal. What legislatively should this administration try to get done so that coal can be environmentally as good as you're saying the modern plants are, and importantly, helping generate reliable, affordable power?
Yeah, so under both the Biden and the Obama administration, there was this regulatory onslaught, and it's a very tangled web that they weaved across multiple fronts environmentally, from everything that how the coal is combusted to how you do with the after product of combustion. And so, our administration, since President Trump has been elected, and with Secretary Wright and Secretary Burgum, and working with the EPA as well, they are working on overturning these regulations, repealing these regulations. You have the executive order signed by the president, which again put the direction for these agencies to go. When I was there when he did the signing in the White House, he established this Energy Dominance Council to figure out ways to attack all of these regulations that have come about, I'll say, under the Obama and Biden administration. And they're making great progress. They're repealing some, they're going to overturn some regulations, but the real way to make it last and make it stick is through legislation, right? And so, because you get one administration and next administration to put the regulations in, they put the regulations out. And so, again, this administration is working with different senators and congressmen on drafting legislation to address these issues, so it's codified and they're much harder to overturn once you put it in legislation. So we'll go over these regulations, and there's another aspect of things Arjun called these consent decrees, which a lot of generators entered into with the Sierra Club to in order to shut down their power plants. That's a major one that the administration is trying to figure out how to address that, whether it's regulatory wise or legislatively, how to address those consent decrees. So there is a broad effort by this administration to attack all of these different fronts. But with that also has to come the economics, right? The pricing signals to generators, to utilities, have to be there to make them. Even if you get these regulations overturned or repealed, you still want to make money, right? And what FERC and other power pools are looking at, and FERC as a federal regulator, is what can we give for pricing signals in the markets today, because the markets are not putting a premium on dispatchability or reliability, right? Which is a characteristic of a fossil or a nuclear plant, but not weather dependent energy. It's not dispatchable. It's not dispatchable, meaning when you call on it, it's there 24 hours a day, 7 days a week. You can't have that with weather dependent energy. And the markets have not been paying for that historically. Now the pricing signals are starting to come out there to pay for that. So you get the pricing signals, you get legislative action to overturn all of these regulations legislatively, and you put those things together, and that's what would make for a strong, robust U.S. coal market going out to the future.
Jim, I was curious, as you were talking, kind of leads us to something that's been coming up for 2+ years, I think, here on our discussions, which is you have this underlying growth in the power markets, which we had not seen for quite a long time, and now you have this growth going on, and that was happening before we all went AI, crazy in terms of like it was coming and now it looks like it's really coming. And at the same time, we were making our grids less reliable because they had different flavors and we weren't engineering them to be, what we needed from a performance standpoint. We were just so focused on decarbonization. Can you talk about a coal plant's contribution to a grid? Like if we were starting a grid from scratch and, no two regions are exactly the same, but maybe just talk about coal's kind of unique capability to help stabilize a grid, to work through blizzards. I think as people are out there thinking about their power choices, I just kind of want to talk about the unique contribution that coal can make.
Yes, Maynard. Now I'll hit on 2 points. First is second is reliability. First, I'll hit on is just cost, right? The expense, your price of your electricity. With 2 real life examples, I'd mentioned the U.S. is sort of like something like Europe, something like Asia, and how it's approaching the coal plants. It's really on a state by state level. You look at the 2 states with the most expensive electricity rates in the country: Hawaii at $38.70 a megawatt hour, and Massachusetts at $29.40 a megawatt hour. They've shut down all their coal plants. No coal plants. So again, if you want to attract industry and you have electricity rates, $38, $39, or $30, now put that in context. You look at 2 states that are among the top consumers of coal: Texas, not just about $10, $10 per kilowatt hour; North Dakota, $7.92. So you got $30 and $40 versus $8 and $10 on cost of electricity, 3 to 5 times less. North Dakota and Texas, big users of coal, right? So again, if you're looking at where do you want to buy your electricity, where do you want something that is not volatile in pricing? Again, coal, you can store it on the ground. You can put 30, 60, 90 days, whatever you want at these coal plants. The pricing is relatively stable. There is some fluctuations. It doesn't have the volatility of gas, for example. That's where you want to look for on the cost basis. But again, on reliability, the coal plants are there when you have cold weather, when you have and pipelines and gas is being pulled off for home heating, as it should be. You see the prices shooting up. You see availability of gas going down. Coal is there. Coal's sitting on the ground. The price isn't changing. It's already bought. It's got 30, 60, 90 days of inventory on the ground. And if you're looking for stability, if you're looking for 365 days a year, around the clock supply of electricity with consistent pricing, not pricing that's volatile day to day based on market factors, in fossil fuels or weather dependent energy, you have nothing better to do there's no better alternative than coal. Now, a nuclear plant can give you all of those attributes of reliability and stable pricing again, but how much nuclear is available and the time to get to the plants built is a whole nother discussion. But from what we have available to us today, with the technology that's available to us today, with the market pricing signals that are there today, nothing compares to a coal plant. And that's what most of the rest of the world has figured out.
Jim, I'm just curious if you ever run into, let's take Massachusetts and Hawaii. Do you ever, because I think the premise in both of those places, they kind of fell into 2 lines of thinking. One is we want to save the world, so we should stop using coal. I mean, they just kind of embrace this type of thinking. I don't mean to besmirch their thinking, but I think they got pulled into that. And then I think the second thing they got pulled into is that other sources of energy are crazy cheap, so we'll be fine. And of course, this is not where they ended up. And then the irony, of course, is it's terrible for their industry. It's terrible for their working people. And they're not, quote, saving the planet. It's just, so do you ever hear from like Massachusetts industrial people or policymakers who say, gosh, Jim, could you come here and could we have a lecture about this? Like, is there maybe Hawaii, that'd be a really great place to visit and talk about this. But do you find people rethinking some of the pathways that got them to what were ultimately not great choices for their grids?
Yeah, I think there is some rethinking going on. To be clear, Hawaii or Massachusetts hasn't called to ask for any primer on coal. I think
if you're out there, Hawaii and Massachusetts, please give us a call or Jim a call.
And they both had coal plants in their jurisdictions before. The thing is the issue. I think what those states fell into the trap as some other countries did is, climate policy, CO2 is an issue, but it is not the only issue, right? And when you look at it with those blinders on, that's the only thing you're concerned about. And you're not concerned about all of these other things about, what you can do for your standard of living and the reliability and economics and in retaining industry and manufacturing and jobs and where's the best place to produce electricity. They all fell into that trap. Now, whether they come out of that or not, it's a state by state basis. There's states, Missouri, Indiana, that are passing have passed very coal power plant friendly legislation where you can't shut down a power plant until you have something that's as reliable and dispatchable to replace it, which is impossible with weather dependent energy. So you have to look at the states, a state by state basis. Some states get it, some states don't. The states that don't, maybe they're relying on the grid to connect them to states that can produce electricity reliably for them. But on the other side of it too is the terms of these AI and data centers and where they're going for their power. We've had some inquiries to us about coal plants, and would we work and maybe look at acquiring coal plants and guaranteeing a supply of fuel for 10, 20, 30 years to that coal plant. We've had those types of conversations coming our way. We've entered into a coal supply agreement recently that can go on into next decade and longer because that generator wanted to have a reliable coal supply to be on the other side of a deal with some data centers, right? They had to have that vertical integration of coal supply for them. So I think industry in certain areas recognizes the value of these coal plants. They may not be outwardly saying that publicly, but they're buying power from entities that can supply them reliably that is backed by coal.
Jim, are you seeing, there's been a lot of news about nuclear coming back on that was maybe going to be phased out. Of course, in the Biden administration, there were these rules about phasing out coal and natural gas power plants unless they had carbon capture technology. I guess it's a long way of asking, are you seeing coal plants that were idled potentially coming back? Are you seeing, are you feeling comfortable that we're going to stop closing coal plants that we ought to keep online? Give us a snapshot of the fleet and what it might look like in 5 years. And this is really a US question.
Yeah, so coal plants that have been retired in the U.S., they generally get decommissioned. I'll give Germany credit for one thing they did right when they shut down the coal plants. They kept them in a cold standby, and they were able to start them again. So in the U.S., basically, though, when you retire a coal plant, it's decommissioned very, very quickly. So bringing back retired coal plants, unless it's freshly retired, is very, very hard. What we have seen is a significant increase in announced delays of shutdowns of coal plants. There's been, I think we have the NMA study, National Mining Association, is about 34 to 36 gigawatts of delayed retirements of coal plants. Again, out of 172 gigawatts in the U.S., so that's a sizable amount of delayed retirements that have been announced. But I think that the true story, Maynard, is still to be seen over the next 6 to 12 months because the regulations left as they were over the next 5 years, we probably would have lost about a third of that 172 megawatts, right? And so now the power generators are getting these strong support signals from the administration. They've got the executive orders, they got the EPA, they've got legislation, all pointing to the direction to keep these coal plants open. Some are just, some have said they are, some have, a lot of them have been quiet. So I think the story is still to be told here in the near term as to these that were previously announced retirements, are they going to be delayed? I'm hopeful that with everything that's been going on and the need for energy, you can't get away from that basic fact that energy demand is growing and you need these coal plants, points us into that direction, but that's a story still unfolding, unfortunately. I feel good about it, but it's not 100% set yet.
Jim, in order to aid the discussion, but also to test ChatGPT, I asked what was the height of the size of the installed U.S. coal fleet. Now, ChatGPT says it was 318 gigawatts. You said the number is 172 now. I don't know if that sounds right, but does that sound about like the height of the peak of U.S. coal plant producing power?
Hey, if ChatGPT says it's right, who am I to I rely on that for quite a few things, but no, that does sound reasonable. Yes.
I have noticed lately, warning to everyone, I occasionally getting some bad answers. So you got to buyer beware.
But I think there's another aspect though with the fleet that we have, Maynard, that it is overlooked. And when you have a power plant, just like with any other piece of equipment, there's a utilization factor. How much is that piece of equipment being used? And of the fleet that we have in the United States, 172 gigawatts that we have at the moment, last year it was only running at a 42% utilization factor. Right? Now, historically, coal plants, given the outages and so on, they run in the 70%. Some make it to the 80s, but basically you're saying in the 70s, give or take whatever range you want to be, lower or upper 70s, utilization factors. So you could take the existing coal fleet, and if you ran it at historical utilization levels, you could almost double, not quite, but you could almost double the output of those plants, going from the 40-some% to the 70-some% utilization factors, which those plants are very, very capable of doing. So that existing capacity is there. It's very, very important. The administration recognizes that we need to keep these power plants online, this 172 gigawatts, and we need to increase the utilization of them. It's a very quick answer, a very quick solution in the near term to where we're going to get this reliable economic power from. And then, the question of if we'll ever build another coal plant and so on is a whole nother discussion. And there is some discussion going on about that. But, we got to get the low-hanging fruit. We got to keep what we have open. We got to make sure it doesn't shut down. And we got to use what we have that we are going to keep open.
There's been this huge influx, Jim, you sort of referenced it, or at least alluded to all these folks who are worried about their power. But there's been this huge influx of big tech into the energy discussion because they need so much power. And it's been interesting for all of us to watch those conversations, those developments, to watch how the tech companies are evolving their strategy around getting the power they need, the types of deals they've been in, et cetera. Have you noticed a willingness to engage around coal by that community as they think about solving their problems?
I haven't been myself in direct conversations with any of those companies, but I have been in direct conversations with whether it's investor-owned utilities or communities or co-ops that have been in those conversations, right? And what they're selling is reliable 24-hour power that's economic. And where that power comes from is not the question. It's, can you give me, can you serve my needs around the clock? And so from that aspect, being once removed from those conversations, like I said, where we come in is then, well, if it's coal, then these coal generating utilities or communities or whatever are coming to us and say, will you supply us this coal to back up this long-term power sale that we have? So that's how I see it at the moment. Whether we're ever brought out into the open and Amazon is willing for me to come to their offices and actually see a coal producer walk into their building and talk about building a coal plant or something. That hasn't happened yet, but hey, hope springs eternal.
Hey, based on where we were 5 years ago, if the world keeps changing its attitudes, that could happen. Mike, what do you think?
Yeah, maybe I'm going to switch and talk a little bit about investors and investors' mindset. And I would just say the U.S. coal industry over the last 5 or 6 years, most companies have restructured. So they went from an equity investor base to a debt investor base to now back to an equity investor base. And I see some similarities with the E&P industry, not from a restructuring standpoint, but what investors are wanting. Investors are saying, you know what, your industry is not going to be around 10 years from now. We want you to return as much capital as possible, pay down as much debt as possible. There's no growth. Maybe a couple things. Talk about how difficult or how easy, how did you navigate that investor base? Where do you think that investor base is today? And what are they looking at, next 3, 4, 5 years? Because a lot has changed from the mindset of coal, from the standpoint of growth in the U.S., growth around the world. I mean, maybe talk about the navigation through this restructuring period in the investor base, and maybe what they're thinking now, maybe what they may be thinking 2 years from now.
Yeah, the investor base has been very focused, and I'll say in general for the U.S. coal companies on the New York Stock Exchange on share buyback, not as much on dividends. You do have some investors that are interested in dividends, but it's mainly on share buyback. They've seen that the tremendous cash flow that all of our U.S. coal companies can generate, with the cyclicality and the volatility in coal prices. So the focus has been on share buyback in EBITDA growth, and but I think the view is changing now to one of that's good, keep doing that. You've got your balance sheets in order, keep those balance sheets strong, invest in your own assets. But these growth markets are international, right? How much are you pointed toward these international markets? The U.S., if you look at my company, Peabody, we have both. We have the U.S. and we have the international. The U.S. is a very consistent cash generator for us, very low capital investment, and we consistently generate EBITDA every year, and we have it, going out well into the future. But then they look at us as they do international companies, which is really has the price volatility and a tremendous upside, right? And give you an example, metallurgical coal right now, premium metallurgical coal it's at a low. It's going like $175, $180 a ton. Post-COVID, it was $400 to $500 a ton. A long-term run rate is $225 to $250 a ton. We can get that coal in Australia, for example, loaded and onto a vessel and delivered for $105, $110 a ton, maybe $130. And I'm saying the low price is $175 up to $3 or $4. So the margins on these international coal, metallurgical coal, is huge. And the same for thermal, not as much on the margin basis. I mean, they're very significant, but the volatility is there as well. Some of the thermal Newcastle pricing now is going $110, $120, $110 a ton, give or take, on a thermal coal. Again, we can get that in a vessel for $50, $60 a ton at times. So the margins there are significant. So investors are looking for, is your balance sheet strong? Yes. What's your debt look like? And how much are you pointed to these international markets that has this tremendous upside and growth for decades to come? So that's what I've seen is what's driving a lot of investors nowadays.
Obviously your company is a diversified company, but the met coal markets to me look like they're, from a secular standpoint, in better shape than probably, the thermal coal markets. Maybe some thoughts about that. Am I correct in thinking that, or what are your thoughts on maybe the long-term growth rates of both of those markets?
Yeah, so on the metallurgical coal, certainly in the coal world in the last few years has the most attention, because again, you look at this blast furnace usage of coal to make steel, and you see growth in that demand going out well into the next decade and beyond. But then you look at the supply side and you see not the growth in the supply side, and especially the premium quality metallurgical coals, which is what we've been investing in and looking at. So, just going back to basic economics of supply and demand, you see increasing demand for many, many years to come, out to 2050 even, for metallurgical coal due to the blast furnaces, but you don't see the supply keeping up with it. So there's a very good thesis around you should invest in metallurgical coal, and the margins are great, as I was saying. What's emerging now, though, is also the thermal coal, right? The thermal coal has always been in the background because of the environmental aspects of it. But the same thing is happening globally as we're seeing in here in the U.S. Power demand is growing. We aren't the only country putting data centers in. We're not the only country that's investing in AI. And that effect of that load growth, that demand growth, still hasn't been seen in a lot of these forecasts internationally that are out there, the EIA and so on. So when you factor all that in and you look at the need for this energy and all the coal plants being constructed, I do think that thermal coal at some point here is going to get the same type of attention that the metallurgical coal has been from investors over the last few years. That's the same supply-demand dynamic. Demand's increasing, supply is constrained. That's good for the underlying supply. So I think that's to come on the thermal side.
That was actually a segue to my follow-up to Mike's comment about international met markets, is sort of international thermal markets. My sense is a lot of the international thermal is dominated by state companies, Coal India, China Coal, and the equivalents in other countries. You know, in the oil business, prior to shale, you'd have companies that would go to Algeria or go to deepwater Angola or Nigeria and so forth. And it was very much part of the business. For some companies, it made sense to look at the global business. Do those kind of opportunities exist in thermal coal? I think you're suggesting they might be coming. If you could just have a quick comment on that.
Yeah, I think there's opportunities for growth in thermal coal production. India, in and of itself, is probably the one having the most significant growth in thermal coal production domestically. But even with that, their projections for what they're building, what they can produce, they still are net short of coal, right? Yeah. China is definitely net short of thermal coal, even though they're a big thermal coal producer. So there is countries looking at how much they can produce on their own, but they're still a net short globally in all of these growing economies for coal, and that's why we feel very good about our Australia platform. But going back to what I said about Maynard's question about the West Coast ports here in the United States in the PRB, there's tremendous upside based on all of those factors if we could just find a way to get that coal off the West Coast consistently, because of this demand growth and the supply growth not really just being there to match it in years to come.
I mean, that's interesting. I mean, I'm going to turn it back over to you, but clearly the U.S. has found a way to export our natural gas via LNG to the rest of the world. And to the extent coal demand is growing in the rest of the world, it would seem pretty logical to want to export our coal. But I guess it does require West Coast states, which sound even more difficult than Massachusetts, but who knows? So
yeah, we'll keep trying. There's, again, maybe I'll keep working on trying to change the perception of coal and how we are actually a net benefit to the world and not a net negative. And maybe, who knows? I keep telling that story long enough, maybe we'll get a port on that West Coast yet.
Well, on that point about the contribution to the world, we had Michelle Manook from the World Coal Association on the show, and we asked her what led you to take on the role, to get involved, and she said, well, I want to say she grew up in Pakistan, but she said coal made such a difference in my life and was so meaningful to me, I wanted to give back. And that's why I joined the World Coal Association. So that storyline is just not something that people in the world that we live in, they never hear that. So I was just reminded of that as you were talking. You kind of touched on that point yourself, Jim.
Yeah. Well, my maybe a little different than Michelle's, but my best day at work is when I'm at a coal mine with my fellow employees, seeing how dedicated they are, how hard they're working at, how they believe in what they're doing. And, especially with the last few years, what's happened with our company and the markets, the more positive outlook for the future. It's, I really enjoy my days at work. I particularly enjoy them when I'm at a coal mine.
Well, now we don't mean to put you on the spot, but I know we would love to come to a coal mine and meet the team and see it and understand it better. That would be fantastic. So I shamelessly just begged you for an invite right here on the show. Yeah,
just pick a continent, U.S. or Australia, and I'll take care of the rest. Or maybe
I love it.
Both. I don't know. Yeah.
I love it. Pick a continent. An expression you don't hear very often. Yeah. Well, Jim, it's been great. If we were leaving our audience with one last thought, what do you think it should be? Because everybody's going to plow back into their own businesses and keep moving along. But there's been so many good things you've had to offer. But is there's something you'd really impress upon non-coal people to keep in mind?
Yeah, I would say that just quite simply, the world is turning towards coal, not away from it. Right? We are the solution to the energy needs of the world, and we aren't the problem. And you have to look at everything in totality, the net pros and cons. And if you look at everything in totality, you'll see that coal is a net positive for the world, for humanity, for standard of living, for industrial growth. So just give us a chance, listen to our story, look at all the facts, and I think you'll be pleasantly surprised.
Jim Grech, thank you so much. We really appreciate it. Thanks, everybody.